Michael, last month we had economist and prominent Bitcoin critic Raoul on the show. As CEO of MicroStrategy, he accused you of irresponsible behavior for converting your firm's cash reserves to Bitcoin, considering BTC's volatility. Just wanted to give you a chance to respond to that.
It's not irresponsible for any corporate executive to convert a weaker asset into a stronger asset.
And public companies are buying this thesis, and we're seeing Bitcoin hit records as a result. What do you make of this institutional and corporate interest in Bitcoin?
In the case of Bitcoin, it doesn't have any income, it doesn't have any use, it doesn't have any utility. So what's the value of it based on what? Based on no intrinsic value and purely a speculative bubble. That's institutional investors saying we're going to invest into crypto doesn't make any sense. You have a failing company that had a flat stock market like MicroStrategy for a decade, and its head was a coke addict, decided then to bet the entire house on Bitcoin. That's irresponsible behavior. And there's not going to be any corporate head who's going to put his cash, as you pointed out clearly, into something that is so volatile. You put your cash in something that is stable.
And if you're sitting on top of $1 billion worth of cash or cash equivalents in the current monetary environment, the cost of capital is 25%. The yield on conventional treasury strategies like holding short-dated treasuries is nearly zero. That means you're running a minus 25% negative real yield. It's not irresponsible to avoid burning 25% of your shareholders' money every year. So I think that the challenge with the critics is they don't offer a constructive solution to the problem. The problem is $400 trillion worth of cash and cash derivatives and fiat derivative assets that are losing 25% of their value or something like that, and 7.8 billion people that are getting paid in fiat currency. So that's losing its value. So if you're going to be constructive in your criticism, you have to offer something to all those people and all those companies. I don't see the critics of Bitcoin offering a constructive solution.
Why would you necessarily buy Bitcoin when you maybe could take care of some of your liabilities?
The cost of capital is approximately the S&P 500 return over the past 12 months, and you can see that number, it's about 25%. There's no investor on the planet that's willing to accept 0% return on their capital in the last 12 months. I could generate 25% return on capital in 30 seconds by simply sweeping all of my excess capital into an SPY ETF index. And likewise, the cost of capital is represented by the expansion of the M2 money supply. That's also 25%. If you're going to be a responsible custodian of shareholder capital, you're going to have to meet that hurdle rate. So, there's no investor on the planet that would stay in business if they went to all their limited partners and said, our intention is to generate 0% yield on all of your money for the next 12 months. So everybody knows it's ridiculous for an investor to invest all of their money into cash. And so to go to a CEO of a company that's a fiduciary responsible for the capital of their shareholders and say, yes, you should invest all of the shareholders' capital in a 0% yielding instrument that's going to lose 25% of its purchasing power for the next year. And every year I can see that's also equally ridiculous. Our company, first of all, our company generates cash. Right, so we've been generating cash and expect to generate cash. We have about $50 million in working capital that we keep in local currencies like euros and dollars and yen and won. And our policy is to sweep all of our excess cash into Bitcoin.
You took on $1.7 billion in debt to buy that Bitcoin, so that kind of leaves an extra about 50% of your market value, which is right now around $7 billion, is the difference between what the company was worth a few months ago and the Bitcoin less the debt. Shouldn't somebody potentially short your company, buy the Bitcoin, and wait for the premium to shrink?
First of all, I don't comment on the price of our stock. I think the price of the stock is set by the public market. But with regard to why someone would buy Bitcoin versus why they would buy a Bitcoin derivative, if you have billions of dollars in a tech equity fund and your limited partners have entrusted you with the billions of dollars, and they've given you a charter, have a charter that allows you to buy publicly traded technology companies, you don't have the option to buy debt, nor do you have the option to buy Bitcoin. You have the option to buy publicly traded tech companies. And so if it happens that Bitcoin is appreciating this year more than 400% a year, and every year on average for the past decade, more than 200% a year, it makes sense to invest in a publicly traded tech company that has its balance sheet and an appreciating asset. That would be the best of your choices, and that's your universe of choices. It would take you, by the way, it would take you a year to change your charter and then to set up the custodial relationships and the trading relationships to buy the Bitcoin, and it's likely you'd lose all your limited partners as investors while you're doing it. It's not practical for a tech investment fund to buy Bitcoin. It is practical to buy a company that owns Bitcoin. Likewise, we have convertible debt that we've issued. If you run a convertible arbitrage fund and you've raised billions of dollars from pension funds and endowments that expect you to exercise or execute a convertible arbitrage strategy, you can't buy the straight equity. You have to buy the convertible debt, and then you're allowed to buy long or go short the equity. That's your strategy, right? Likewise, if you're buying stocks like Square or PayPal or MicroStrategy, we have exposure to Bitcoin. So that would be a compelling thing if Bitcoin is a strong asset. And if you can buy the underlying Bitcoin, then that's a good idea too. But again, it's literally either it's impossible or impractical for many of these pools of capital to do it. And that explains why people are interested in companies with Bitcoin exposure in the public market.
Michael,
the stock would be valued based upon the value of the underlying assets. It's based upon the expectation of the performance of the business intelligence company, which is an enterprise software company that generates substantial cash flow. It's also based upon your expectations of our execution of our Bitcoin strategy. Right. And our Bitcoin strategy is to acquire more Bitcoin either with equity or with debt or with free cash flows. So we were just able to go and borrow $1 billion, $50 million at 0% interest for 6 years and buy Bitcoin with it. And so that's an option we have, and it's possible that over time we'll be able to execute future options. And so you have to, if you're going to value the company, you have to crank in a lot of expectations, and everybody's welcome to make whatever assumptions they like. It's a free market. If you want to look at MicroStrategy, you will find that our stock was trading about $120 a share before we embarked on this strategy. And it is trading wherever it is trading today, but substantially north of $120 a share. So I do think that our Bitcoin strategy has been a success, and I think that our shareholders view it as a success. I think that's quite evident, self-evident, if you simply look at the stock versus where it was a year ago before we embarked on a strategy of acquiring and holding Bitcoin.